everyone, it is Evan here from the Trade Risk on Tuesday, December 4th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So stocks got completely hammered today, 3% right across the board or more to the downside on the major averages. You can see here S&P 500, Dow Jones, IWM over 4% to the downside, Q's approaching 4%. If you look at the S&P 500, I believe this is in the top 3 worst performing days year to date for 2018. So it was pretty ugly out there. But when we look here at, say, the 5-day change, this is where a little perspective does help. Notice we are still, incredibly, even though we did give back a tremendous amount of gains today, we are still green in 3 of the 4 major averages over the past 5 days. And that speaks to the real sort of rip to the upside that we saw last week, and then the upside gap open that we saw on Monday, yesterday's session. We'll talk about that in just a little bit when we look at the charts, but really giving back most of the gains from last week. We're not making new lows yet, but if we do see follow through, of course, that will be a different story. But a little perspective there helps. A real ugly session, but still trying to hold on to some green 5-day performance numbers. We look at some of the moving averages here. We've definitely lost some of those, and we look at particularly the IWM. Take a look at this. We're below last week's low, so we have at this time, it is only Tuesday, but we have a weekly bearish engulfing bar on our hands. There's still 2 days worth of trading left. Markets are closed tomorrow, so do keep that in mind in observance of former President George Bush's passing. So we do have markets closed tomorrow, so 2 sessions left this week. Also helps explain, or might help explain, some of the exacerbated sort of selling we saw today, or the sell-off, because we are going to see global equity markets trade tomorrow. U.S. markets will be closed. Futures markets in the U.S., I'm not actually sure if they are closed or not. If you know that, you could leave a comment in the description of this video. That might help out some other people, but I'm actually not sure yet. I haven't looked that up if the futures market is trading U.S. futures tomorrow. So anyway, when we look here at the performance, ugly start to the week, but we're still trying to hold on to some of these gains that we made last week. We can see it's more defensive areas now, utilities and healthcare up at the top here, top 2. And when we look down here, financials really rolling over hard today, as we saw bond prices, yields fall on the long end of the curve anyway. So lots to talk about in respect to that, which we will in a moment when we look at the charts. VIX here spiking, and all the way down we still got natural gas performing well, TLT on the move to the upside as well. So let's jump into the charts here with the S&P 500. We can see we are down around 2% so far, a little over 2% this week. And really when we look here at the long-term weekly time frame, we frame out price action, and what we see here is we are still moving sideways in these large-bodied candles, these large ranges that we're seeing here. It speaks to the volatility in the market right now, but we're seeing some, that expansion in range over the past 7-8 weeks of trading, and we are still between this 2,800 and call it 26 and change, 26 and a quarter, this 175 point range. That is where we're dancing in between. We started the week off trying to test the upper end of it. We failed here. We have an outside sort of reversal week back into the middle of this range, and so the chop continues. So really structurally nothing has changed here on the weekly chart. We talked about that last week as well. We had this great session to the upside. Structurally it didn't change anything, and now here we are kind of giving back some of that progress from last week. Now it is certainly not a bullish characteristic here to be below a long-term trend line. So this yellow line that extends from the 2016 lows, we are below this line, and we're seeing expansion in range. So we're seeing markets really react pretty violently, if for lack of a better word, underneath a important trajectory, and that is not necessarily what you want to see. You want to see volatility start to compress in here and then eventually put some structure in to lift higher. This wild price action underneath this is not necessarily, from a price action perspective, what you want to see if you are bullish, but it is yet to be seen on which way this ultimately resolves. Still looking at the very larger range here, 25.33 to call it 28.72. So let's go down to a daily chart now of the S&P 500, and we'll switch over to this view here, and you can see a very loud 3.24% to the downside. Notice we still have MACD that is seeing that positive divergence over this past 2-3 weeks period, and we do still we're attempting to hold on to positive territory, but that is surely to turn negative next when we open back up on Thursday. If price is anywhere down here, is surely to turn back over. But really, when we look here at the more granular view, this is the range that we talked about, 2,800 to 26.25. This is where price has been oscillating in between. It is trendless. Volatility is elevated. It is just whipsawing traders back and forth in this range. So it's a time to either sit on your hands, play defensive, raise some cash, whatever you need to do and whatever makes sense for your time frame. But right now, we're just seeing a lot of arguing in price here, and we really want to see 2,800 either taken out to the upside or new lows getting made, 26.25, before we really start to pick a more directional or have more directional momentum behind this market. So we're back to the midpoint of the range. Let's see what happens. 2,700. This has been a little bit of an inflection point here. Maybe this was it. Maybe this is the extent of this time around sell-off. Maybe this was really shaking out any of the chasers up here in any of the last week longs that are ready to throw in the towel, aggressive shorts. And maybe we pivot into the end of the week and have this nice Santa rally that everybody likes to see. That is a scenario. The second scenario is, of course, that this is just the start here. This outside weekly start here, reversal candle, is the start to a move back down to these lows and an eventual breakdown and a second leg lower to the year-to-date lows. That's scenario number 2. And scenario number 3 is we just continue to move in this 175-point range for the next several weeks, couple of months, foreseeable future. So anything in between, pick your poison, pick your narrative, whatever it is. I think just need to adjust to it, understand that the VIX now is back above 20, so there is fear back in the market. Ranges are still high. We're trendless here. Moving averages, or looking at the 200-day moving average, is pretty flat. Prices below it if you're a fan of that. And that's sort of the market that we have given to us right now. Financials really rolling over hard. We'll talk about that briefly. We don't usually get into the sectors, but I do want to mention that later in this video. Let's go to the IWM next, which is the worst looking of the bunch right now. If you take a look here, notice we do have this bearish engulfing bar already printing here on the weekly chart. Again, it's only Tuesday. We have the MACD still pretty much at new lows here on the weekly chart. So if you're in the bear case, if you think this market's heading lower, it's going to be the small caps that you can hang your hat on, because these still look the weakest here of all of the major averages as we gave back all of last week's progress, and we're starting to head south again. If this starts to break to the downside, if these recent lows break, then of course that is going to put tremendous pressure on the markets as a whole. If we see small caps start losing this recent support here, it's going to be it's definitely going to be a good line in the sand and point of momentum to pay attention to. NASDAQ 100, look here, weekly chart down 2% this week, still holding the majority of last week's gains. Actually, we saw a 6.5% rally last week, and that's what we need to keep in perspective, is that as violent as this day was, okay, I'm not trying to sugarcoat this day, this is an ugly session no matter how you cut it, but let's just keep in perspective here that we just rallied from low to high of Monday a little over 10%. So we've given back 3.84% of that today. We're in the middle of this range. Let's see how this shakes out. Best case scenario, I think for all fronts, is just let's quiet down a little bit. Let's just chop around in this range here, tighten things up, and let's make a more, for traders anyway, we always like to see those tight ranges before we get those breakouts. That's personally what I would like to see, whether it breaks up or down. Just tighten up here, fuel up for the next move, and then let's see what happens. Of course, doesn't have to be the case, but for now, Q's back in the middle of this range. So that is that's what's going on with the market there. A lot of action, a lot of headlines, tariffs, deal, no deal, all this stuff going on. So there's lots of headline risk out there and event risk out there, so keep that in mind. We're getting into the end of the year. We got tax related selling, you got markets just winding down, you're gonna have vacations coming up, so it'll be interesting to see how the month of December, which is seasonally, at least the second half, a bullish month. We'll see if seasonality matters. It did not for Thanksgiving week, but we'll cross that bridge when we get there. So let's get to some of the other major markets. TLT, which is a very important market now to pay attention to, is we saw a big volume, almost 250% of the 20-day average here move to the upside today, 1.67% gain. We didn't hold on to the highs, but we did reclaim, and we moved back above a very key level. This was multi-year support in here, this 117 area. This is what we lost in September to the downside. We are now back above it. If we zoom out here, you can see it goes even all the way back to 2015, 2013. This had some important areas. So now that TLT is back above here, we want to see if it can close the week above here. Again, we had this small fade a little bit at the end of today. It's not the best looking structure down here, but if this proves to be a false breakdown in the bond price here for long bonds, that could be some pretty big pretty big implications there, especially if we're seeing a more flight to safety here. If the equity market's going to take a second leg down, maybe TLT acts as a safety haven, could very quickly be back up to the 122, the upper end of this range. I know this is not a popular view right now. I have no horse in this race, so I'm simply an observer right now, but if we can continue to hold above 117 or so, it's tough not to think that we can't move back higher and start getting back up into the upper end of all of this consolidation from 2018. I think it'll be pretty fascinating to see how this closes out the year. Good volume coming in so far this week. Let's see if it can hold those gains. If it gets quickly rejected, if we see some big failure here into the end of the week, then of course, different story. But for now, we have what looks to be a false breakout trying to get back above this big structure. So keep an eye on that. USO here is remarkably now actually doing pretty well this week. So 4% to the upside so far. Had a nice rally to start off, nice gap up on Monday. Some news around that. 5% held today. Inside session pretty much held. So while everything else was kind of kicking the can, rolling over, pretty much like USO was over the past 2 months or so, USO is actually hanging pretty pat here, just holding up above these recent lows. MACD trying to move higher here. It's still in real tough territory, but this rubber band is quite stretched to the downside. We did, arguably, or trading right at that trend line here. So it'll be interesting to see if we can get that dead cat snapback bounce up here. So far, it is trying to hold. Natural gas also still winding up here, flagging out, looking like it's ready or getting ready to make a secondary move here. It would be pretty impressive to see if natural gas can make another leg to the upside here, really put the squeeze on anyone trying to aggressively short this pretty historic run up over the past few weeks. It is tightening up here, still have elevated volatility, elevated average true range. Everything is pretty boosted here in UNG. So play, keep that in mind if you're playing this either direction, that the range has expanded here quite a bit. This is not the same natural gas that you saw 2 months ago. This is trading at much bigger clip, so do keep that in mind, but is really consolidating here, working off this rally mostly through time. That is as bullish as a technician would want to see in a market. So that and actually gold, let's go to the metals first. Gold and silver getting a nice lift to the upside here, getting some space between this 115 area. This is what we've been talking about in the past couple of videos, is just seeing whether or not this can stay above or below this line in the sand here. We are now starting to lift above it. That is constructive to see here. GLD bulls keeping this trend that has been pretty sloppy, but grinding higher since September from the lows here around 111. Now still, continuing to kind of work its way higher. So a little bit of constructive action there. And silver still trading in the sideways channel here, but towards the upper half now. Some good volume coming in the past couple of sessions. Still, reluctant to hold on to the intraday gains in at least the SLV ETF, but we're not breaking to new lows. We're still, arguably consolidating in the sideways channel. So we'll see how this ultimately resolves over 14 or below 13.10. Those are the areas that I'd be paying attention to. So that is it. That is what I have for today. Again, markets are closed tomorrow. Keep that in mind. It is a tough market out there. Lots of whipsaw, can easily be fooled here. And you can easily get chopped up, so do keep that in mind. Understand that look at that weekly chart, zoom out, and you can see that we really just haven't gone anywhere, and we're mostly just kind of moving sideways in this range. So hope that helps. Hope you enjoy the videos. Every Tuesday and Friday, you can subscribe on YouTube or head to thetraderisk.com/blog. You'll see them posted there every Tuesday and Friday. Thanks so much. Talk to you next time.